Hello, everyone. Welcome back to Level Up with Naomi, where we empower and lift each other up. Today's topic, I'm really, that's so I'm really excited about this topic. That's something um, I'm learning. Me and my husband are learning. As this is a very, very good opportunity for each one of us to learn about the real estate market. So, for those who are watching live, thank you so much. And for those who will be watching the replay, thank you so much for your time. So, for those who are watching live, this is an interactive podcast. So, feel free to sorry about that. So feel free to put your questions or your comments in the live chat in YouTube. And so yeah, let's get started. So we will be learning a lot today, and I hope that this episode um, will help you decide on or on your plans, your dream homes, your plans. I'm really excited for this. So I do have two speakers today. For the first time, I have two speakers, and I'm ready to like get those information from them. Yeah. So I hope you are too. So go ahead, put your questions for them. So our first speaker is Lillian. So Lillian Wong is a senior mortgage advisor at Nexa Mortgage and has worked in the mortgage business for over 28 years. So watch out, guys. In Arizona, California, Florida, Illinois, Nevada, Tennessee, and Texas, and her experience shows. So Lillian is a multi-million dollar producer and has helped thousands of families achieve their dream of home ownership and creating generational wealth through real estate. Lillian is successful with knowing every element of the loan process through processing, funding, auditing, and of loan types, and her knowledge of operation side enables her to give buyers a thorough explanation of the process, giving them a feel of what to expect every step of the way. So uh, through the start of the transaction and even after the loan closes. So Lillian loves helping people find the right loan for their specific needs and lifestyle. So, friends, ladies and gentlemen, please help me welcome Lillian Wong. Hi,
Hi,
Lillian.
Naomi. Hello.
Hey, thank you so much for gracing
Thank
us
you.
with your
Thank you for
presence. I
having
know
me.
people's brain are now running. I hope you guys would interact with us. This is really a good topic and very timely as well because people are
Yes,
worried, right, with what's
there's a
going
lot
on.
going on. Yes, in the real
Yes,
estate mortgage market, definitely.
yes. So let me introduce our second speaker as well. He is a good friend of mine. Mr. John Gooding was introduced to me years back, and we've been working together since then. Mr. John Gooding has been both realtor and real estate investor for more than 25 years. His vast experience in building an extensive ongoing clientele as an agent, coupled with building a win-win situation in his personal investing, has enabled John to amass over, watch, listen to this, 1,700 successfully closed real estate transactions, mostly in the Metro Phoenix area where he resides. So John loves to talk real estate and is happy to share his life experiences in ever-changing market. Ladies and gentlemen, please help me welcome John Gooding.
Hey,
Hi,
hello,
Mr.
Naomi.
John.
Hi, Lillian, and hello,
Hi,
everyone.
John.
Hello. Great to see you all.
Good to see you.
Good to see both of you. So I'm really excited about this topic. I know I've mentioned, Mr. General, I really want to discuss this because people are so scared nowadays with the inflation rate, with everything that's going on. They're not sure if they really wanted to buy a property right now. Is this the right time? Are they going to lose money? Right? So
Right.
I've
I'm
got,
going to touch upon that. But before I
yeah.
do, I just want to thank you, Naomi. I just want to let you know I enjoy your podcast. It's very
Oh, thank
inspiring,
you.
very uplifting, very educational. And, you and I go back a long time. As you said, we met through real estate,
Yes.
and I got to know, I don't think of you and Eduardo as clients. I just think of you as friends because as far back
Yeah.
as we go. And so I'm just happy to be here. I just wanted to express those words. But anyhow,
Thank
yeah, regarding the
you.
market, interesting what's going on right now. The state of the
Yeah.
market, okay, right now, and this is just really in the last 3 weeks or so, the market is shifting. All right. And I took a few notes here. And we know, of course, interest rates since the beginning of the year have
Mm-hmm.
gone up. And Lillian will talk how they might be leveling off a little bit right now. But in general terms, they have been going up. Properties
Yeah.
right now are taking longer to go under contract. So we call that DOM, days on market. Okay.
Mm-hmm.
So that's something, what's happening as of late. We're seeing more price reductions than we've seen in the last 5 years. And the reduction in the number of home searches, according to Zillow and Redfin, the home searches are massively down. Okay. So what does this all mean? Okay. We're seeing a decrease in mortgage applications too. But here's what we have not seen. And here's the positive trait, okay? Because people think, oh, is the market going to really tank? What we have not seen is a massive spike in inventory. See, that's the big gorilla in the room, back in, so what does that mean? That means that buyers are gobbling up homes still. You kind of hear, these shifts in the market. Buyers are still gobbling up. They're buying up these homes. So you have a reduction in home searches, a reduction overall in mortgage applications, a reduction in prices, longer days on market, yet people are buying and they are buying. In my market, I live in the Metro Phoenix area where I work mostly. And in my county in 2008, 2009, and 2010, when the market was tanking, was really going down, the interesting thing is we had more sales in my county than we ever did before.
Oh,
Okay.
wow. Oh,
So,
yeah.
what I'm saying, I said all that basically to say all this. If you're a buyer, it's very encouraging. There's going to be more inventory to choose from. Maybe you're negotiating can have more importance instead of the sellers may not necessarily have their way entirely the way things are going right now. So that can help a buyer. Now, it's still going to be a strong seller's market, but things are loosening a little bit. And so I just wanted to make that point.
Oh, wow. Okay. Yeah. So before, within 24 to 48 hours, there, we do have like a solid buyer, right? So now it's taking a little longer.
I'll tell
Yeah.
you another interesting statistic. Right now, foreclosures are up 700%.
Oh, wow.
Wow.
700%. Now, why is that? A lot of that has to do with a backlog of of um, of properties that the banks have been holding back. Okay, the loan modifications um, that the banks have been providing for buyers during the pandemic are starting to expire. So there's going to be more inventory on the market for buyers to have more choices. So again, I don't believe there's a such thing as a good or a bad market. It's the question is how is one positioned? Just like the stock market, there's no such thing as a good or bad market. If you're buying and you're getting opportunity, if you're selling, it depends on your personal situation, how you have structured yourself. So wanted to share that.
Oh, that's really interesting. Yeah, and I noticed too, like sometimes because like example one is building a property and it takes really long time, like so, like for us it happened to us like a couple of times actually. Like they were the goal is for the house to be done like in 3 months, which was the common one before, right? Now it takes about
Yeah.
5 months, 6 months, so people are like losing their
Panicking. Yeah,
their
they're
interest
panicking.
in buying that property, right?
Yeah.
So
And now in
um
today's market, speaking of new construction, there may be more of a selection because new home sales are down right now from a year ago. You know,
hmm,
yeah.
yeah,
And talking, we were talking about foreclosures just here in the Metro Phoenix area. There are 32 foreclosures um, a day. 32
a
foreclosures a
day.
Oh,
day. Yeah,
wow.
Oh, I was hoping like a week, a month. That's a
a
day.
day.
That's
That's
really,
quite a
Yeah.
really
bit.
Hmm.
that, that's
Yeah.
really interesting. Oh,
Hmm.
okay.
And that can spell
Before I
opportunity for the right person. That can spell opportunity. You know.
yeah. In relation to that, before I ask another question to Mr. John, I want to ask Lillian. So that's the like the inventory of the houses. So what's happening in the mortgage market now?
Right. So there's been a lot of activity in the mortgage market. We've all seen our interest rates be low for so long, and we've all probably bought or refinanced our mortgages in the threes, in the low
Yeah.
threes. And since last December till now, I mean, rates have increased at least 2%. So now we're in the fives. Interest rates are in the fives. And that's quite a big sticker shock for a lot of people, because on a $400,000 home, that 2% increase can be as much as $460 a month on a mortgage payment. And if you compound
Yeah.
that with the rate of home appreciation that we experienced last year, which is on average about 20%, you're talking about that $400,000 home now is $480,000. And that mortgage payment increase is about $890 a month. So,
Oh,
all in all, that's like a 53% increase total. That's affecting people's home affordability. So, I mean, that's a lot of people are getting shocked by that. However, if you own a home right now, you have a lot of built up equity in your home. And so we can look at move up type situations to use the equity that you have built up in your home to purchase another house, albeit it'll be a little bit higher, but you're going to put that equity into that new home. And even though rates are higher, with that much down payment, we can, work the payment to where it can still be affordable.
so when you
So there's,
use that, oh, sorry.
yeah,
So
so there's
when
a
you
lot
use
of,
that
creative.
equity,
Mhm.
yeah. So when you use that equity, it also means the amount your loan will be more, right? Because you actually use that equity.
Well,
Yeah.
with the rate, it's going to be a little bit more, but you're putting down, the equity that you have built up in your home. So instead of just putting 10% down, you could probably put 20% down,
Mhm.
and that would offset the increase in the mortgage rate, you know,
Oh, okay.
making the payment a little bit more affordable rather than just putting a minimum down payment.
Yeah,
So,
because most people are like, the interest rates are really high. The prices of the houses are like doubled for like for the past months, right? As
right,
compared to years ago,
correct.
at least a year or two ago, just before the pandemic, like. And so they were like, especially for the working Americans, their salary did not really
And that's
compensate,
exactly right.
right?
Wage increases have not been keeping up with inflation.
Very
So
true. So
that's
less
another
people
problem.
were able to afford buying a property these days. In
Right.
addition to that, Mr. John, I do have a question for you because you are also an investor, right? So you
Correct.
do real estate investing because of what's going on with the market right now. Is it difficult for people to get started, and what type of investing do you do?
Well, that's a great question. In the real estate investing field, when markets tend to shift, maybe a slight downward trend is actually offers more opportunity for investors. Let's start with the first with the new investors. I'm sure there's folks out there that would like to start in real estate investing. They don't know how to even get started. They may not even have
Mhm.
enough money. They don't have the education. However, those problems can be corrected. And what I mean by that is that um, there are many real estate investment groups. You want to find maybe one in your area and start meeting people, get into their lives, people who are where you want to be as an investor. Now, there's different types of investing. There's wholesaling, where wholesaling is not, you're not the actual end buyer. You're either going to assign the contract to a future buyer or you're going to do a double close. That's called wholesaling. Then there's fix and flips, right? And then you have situations where buy and hold. I'm more of a buy and hold type of investor. Now, I think everyone should maybe have a specialty, but you might have different situations. Like not too long ago, I had a situation that presented itself. It wasn't advantageous for me to keep the property long term, but I saw the value in fixing it up, doing a little bit of work. I call it put lipstick on a property, paint, carpet, maybe new flooring, nothing too major. And then I was able to flip it for a quick profit. So I'm in
Oh.
and out of the deal quickly. My situation, because I want to build long-term wealth, I'm a buy and
Yes.
hold. So that means putting good quality tenants in a property so that I can get positive monthly income streams, revenue
Mhm.
producing income streams so that I can duplicate. See, we could either work for money or have money work for us. So that's why I like rentals myself.
Mhm.
Mhm.
And
Yeah.
so I look for situations like that, but I've made mistakes. I mean, we all do. In my early days of investing, I made some crazy, stupid mistakes. I purchased property based on appreciation. And then when the market went down, guess what? My investment, and then I had all this heavy debt. So fortunately, over the years, I've been able to, I worked through that and I had to rebuild. So, so I buy based on cash flow. The property, when I buy a property, it has to have good. Well, I mean, good. I have to have at least $300 of monthly cash flow the very first day or the first month that I own that property. It
Wow.
has to. Equity is wonderful, but
Mhm.
but there's a
Cash
saying:
flow.
equity comes and goes,
We need,
but it's the
yeah.
cash flow that flows, right? It has to keep. So that's what. See, I can if I go out to dinner tonight with my friends or family, I cannot pay for that dinner based on the equity of my home, right? I can't pull that
Yes.
money out. I can't go
Very
buy
true.
sushi that way, right? However, by the monthly cash flow of my rental properties coming in, that allows me to buy dinner, right? Literally. So that's what I look for. Because again, the equity is wonderful, and over time, homes will increase in equity. But I don't buy it based on that. To me, it's too risky. So, um, so even if the market went down tomorrow, I will still get rent because rents typically always here in the Phoenix area, rents have never gone down in a year in over 70 years. It has never been a down year. Now, it doesn't mean that the rents have increased dramatically over the long term like they have in the last couple of years, but they have affected they've been in a situation where they've been always been able to increase, and that's what I look for: cash, uh, positive cash income.
Yeah. Right now, like you buy a house, it's worth like from 400s to 600s, right? So usually the payment would be like more than 2400 monthly, and then
Mhm.
more than 3,000, right? So
Mhm.
how would you price your rental? Are there people renting in more than, because we have to at least have, you said at least 300, right? The very first
Mhm.
month.
Yeah.
Yes. So how are the rentals being priced these days?
Okay. Well, that's a good question. So what I do is, for me, when I buy investment properties, okay, I buy properties. I get seller financing, creative. I call it creative seller financing. Here's how I work around that, and that's a great question, Naomi. Unlike a lot of investors who try to come in and they lowball, they come in really low. It's difficult to get a seller to say yes, especially in this market. But I'll tell a seller, Mr. and Mrs. Seller, I will pay market value or even higher market value if you can give me terms. And most of the time, they're going to ask me, John, what do you mean by terms?
Mm-hmm.
And I'll say, well, if I can get my monthly payment to be such and such, and I just tell them I need positive monthly cash flow, I will give you your price if you can carry the note and give me low payments so that this investment can work for me. What do most people, what do most sellers want? They want their price. They want their price.
Yes, of
So
course.
give them their price, but in an exchange, it has to be a win-win situation. I want my monthly payment to be as such that if the market goes down tomorrow, that I have um, monthly income. So I'm all about cash flow. Okay. So it's a little
That's what
twist, it's a little
people
bit
are.
different.
Yeah, that's what people are scared of. What if tomorrow the market goes down and they lose their
Right.
money, like right there and then?
Right. So it just takes a little bit of knowledge, learn the market. Now, for the new people out there listening, I would suggest squat up, get into a real estate investment group. Okay. So what do you do? Say you're an investor, you don't even have money for a down payment.
Mm-hmm.
What I would do is I would get to know some of these investors who are in a position where you might want to be someday. Approach them and bring value to them. Now, what do I mean? Ask maybe to go on there some appointments with them, right? Get to learn what they are doing. Be
Mm-hmm.
of value. Maybe run some errands for them and just say, in exchange, I'd like to get some knowledge from you. Now, what you don't want to do, don't ever, and this is probably for any field as an entrepreneur, someone who you want to emulate, don't ever ask to take them to lunch. Don't ever ask them to take them to dinner. Okay. Now, why do I say that? Because don't ever say you want to pick their brain. That's probably one of the worst things you can do. Now, why do I say all that? You want, because you're not giving them value. Okay. You want them to give. You want
Yes.
them to give of their time. Don't buy them lunch. They can buy their own lunch. They can buy their own dinner.
Mm-hmm.
But what can you do for them? Okay. Now here's an example. I know a guy. When he was a newer investor, he wanted to work the probate properties. Properties that go into probate. So he approached attorneys for business. Now he didn't pick up the phone and say, "Hey, I'm such and such, and I want to get some business from you as an investor." Okay. Instead, he called and he said to the attorney, "I want to be an asset to you. I want to bring value to you. If there is anything that you need, okay, if you need me to go and change the locks on a property, if you want me to make some phone calls for you, uh, attorneys, I don't know if you ever experienced probate situations or when you're talking to, you're on the phone a long time. Maybe you can place calls, you could run errands, anything. The opportunities are endless that you can bring value to somebody. And guess what? They're going to remember you. And in fact, they might, when there's a good deal, because there's a lot of value in real estate probate properties. Properties get inherited to a family out of state, and the family's excited to have that property. But then all of a sudden, they have to pay the taxes. They have to pay the upkeep of the property. They
Yes.
have to pay the
Yes.
insurance. And the home is running down. They might have tenants who are not paying. These are situations that they never bargained for. So guess what?
Mm-hmm.
That property they may want to sell quickly because
Yeah.
they're not, it's out of their league. Guess who that attorney may think of? Now, still, so you're kind of new and you may not even know how to go about purchasing it. Well, what then you can do is, from the people that you meet from your investment groups, squat up. Go ahead and say, hey, look, I have this deal. I don't have enough for the down payment. I don't have this, but I have a great deal that could be good. Well, by partnering up maybe with an investor or even a private lender, okay, say, hey, you front the money for the down payment. And I'll give you, as an example, I'll give you 30% of the
Yes.
partnership, of the rents, of the exit strategy of when I sell in 5 years. Now, you think that's bringing value to people? You better believe it. So there are ways of getting involved, but don't be a go-getter, be a go-giver. Okay,
Mm.
that's how you're
Oh
going to
yeah,
succeed.
that's good. Yeah, so in order to learn, yeah, don't just take and take. Yeah, that's very true, Mr.
Exactly.
John.
And there
Yeah,
are people
because
that want to learn.
Reciprocity. Yes.
one take, learn,
Yeah.
learn from
Uh-huh.
somebody, from an expert. But sometimes, I'm like, why will I teach you? Give me a reason for me to teach you how I do things, right?
Yeah,
That's yeah.
exactly. Yeah, and how many people approach other people to want to approach in that fashion? It's really sets you apart, you know. And again, get involved. I'm a member of a Pace Morby investment group, Sub Two. Okay, he has a program with his partner Jamil on A&E, triple digit flipping. Okay. And so I'm a part of this community. Get involved in communities and the real estate Facebook groups. That's how you want to get your name out. See
Mhm.
who's making a lot of comments. See who's really active in it, and then do and DM them or call them and just say, hey, look, what can I do to help you? I'm new in the business. Okay. And this even goes with people who are experienced. You want to broaden your horizons. You want to have more opportunities. You want more lines in the water. So what can I do to bring value to you? Maybe your lead generation. They see, when you have people who are very busy, like investors who are very successful, they don't have time to call a list of pre-foreclosures, which are an
Mhm.
excellent lead group, right? Or probate or absentee owners. So, and there's a lot of opportunities. So you might ask to work that list for them. They can give you a script. So there's the ideas are endless if you think about it. And anyone out there, I'm sure Naomi will give you my contact information at the end. Feel free to call me,
It is,
and
yeah.
I'm
It's
happy to share what I can. I'm more than happy to do that.
In fact, both of your information of how they can reach you is in the description of this episode already. But I will also, of course, ask you to
Awesome.
share that. That's
Great.
fine.
Great. Thanks.
Yeah. So so I guess before this just popped into my brain right now. So who can be an investor? Because people think, somebody who is a millionaire, somebody who is like can be an investor. But in your experience, Mr. John, who can be an investor?
Anyone who, I guess you'd have to say, anyone who is entrepreneurial, you know, um, uh, someone who's not looking for a 9 to 5 job. The nice thing about investing is that you can be successful just working 10 hours a week, 20 hours a week. You can do it. Um, the thing that stops most people is they say, I don't have the knowledge. But guess what? The knowledge is out there. Just partner up with people. Okay. Use, like, I'll tell people, even as a realtor, because I'm a realtor, I'll have people who are new in the business and they say, John, I got this listing, or I have an opportunity to get a listing. But, I said, well, maybe if we co-list the property, use my experience, my credibility. Okay. And let's use your resources. Let's get together. Let's work together. So that's why I would say people are new in real estate as well as a realtor, Yeah.
And I believe that's true in every business, every business, really, in every,
Absolutely.
to
Every
be
endeavor.
able to reach your goal, to be an expert, you have
Mhm.
to learn from the expert. But don't just it's a process. You have to go step by step. You have to watch what they're doing. You have to learn what their day-to-day activities are, right?
Mhm.
So that's true
Yeah.
in every business, actually,
Yeah, and
even.
Right.
mistakes can be costly. Yeah,
Right.
yeah.
Yeah.
Yeah. Don't be a
And you
secret
have to
agent. That's what I'm
invest.
saying.
Mm-hmm.
Yeah,
Yeah.
you have to invest your time to be
Mm-hmm.
able to
Yeah.
learn
Mm-hmm.
this.
Yeah.
Yes.
Because if you try to do it you're alone, when you pick up your phone to call somebody, that phone is your iPhone or Android is going to feel like it's 50 pounds. You just don't want to make that call. It's too, but if you have people around you who can support you, it's all about community. You're going
Yeah.
to do fine.
And also, you mentioned about the script. That's very important because when you're new, you really don't know what to tell people.
Oh,
You
yeah,
may be able to dial that number, but you actually don't know how to respond when they said hello on the other side of the line, right?
exactly. When
Yeah.
I was
So
a brand new realtor, actually, I was a broker in Chicago before I moved to Phoenix. And the and I didn't really have a lot of contacts. So the first thing I did is I worked expired listings. Expired listings means homes that were listed by a realtor but failed to sell, and the expiration date surfaced, and that property was no longer listed. That gave me an opportunity to approach that seller direct and say, you know, I'd like to take a look at your home. But I started with the script. And when you can memorize the script, if you don't have a script, you're fumbling for the words, you're using too much brain power. You're using like 90% of your brain power to try to get the words out to try to sound, logical, but when you do that, you don't have time to work on your demeanor and all that. So by having a
mhm.
script, you really only have to use about 10% of your brain power. And so you can use the other part of your brain power to talk slower, talk more as a friend, talk to, you're not going to sound as nervous. And that's probably with any type of business, even
Yeah,
you're not in
through
sales.
practice. You'll get better with
Very
Yeah,
practice.
true. Hmm.
yeah, yeah,
Yeah, and as you continue to use that script, you will actually be memorizing them, and
Mhm.
it's like in your subconscious already,
that's
right?
right. And
Yeah.
over time, when you talk, the more you do it, I remember almost every response a seller is going to give you. And
Yes.
Yes.
very seldom do you get
Yes.
derailed. I mean, it's going to happen. You'll get derailed,
Very
but
true.
you're gonna. In fact, I had to stop myself from jumping in with the answer too quickly because I want you got to take a few seconds because you want to show how professional you are, and then you're jumping in too quick. So you got to kind of watch yourself a little bit. But it does give you the comfort to be able to pick up that phone over and over and over again, and you're like, I got this. I can handle it.
Hmm. And I guess in every industry too, it's important that we are not emotional when we pick up
Yeah,
this
yeah,
phone.
yeah,
Because if you are, then you may get offended by the person on the other line, and then
yeah,
everything will be like you'll black out, and everything will be,
yeah.
it will not be a good conversation.
True,
Yeah.
true.
Yeah. Speaking of the mortgages and loans, any of you can answer, Lillian, or any of you. So what are the type of mortgages or loans for investors?
Well, I wanted to piggyback on John's investment, strategy here because we do offer mortgages specifically for these investors, and the qualifying is actually pretty easy. So long as the house cash flows, it's pretty much a done deal. So, I mean, but there's loans out there for that, as well as private money. We do have private lenders. I mean, we work with over 160 different lenders, and we have a variety of different programs and lenders that offer private money, commercial lending, multifamily. Multifamily is really popular right now. So, I mean, we have a lot of different, options available.
Yeah, great. Yeah,
If
now
I
I'm
may comment
thinking.
real quick, Naomi,
Sure.
we come across a lot of realtors, we come across a lot of loan officers. And Lillian, unlike I would say 99.9% of all loan officers, Lillian has vast experience as being an underwriter. Now, underwriters are the people who actually approve the loans, right? Loan
Yes.
officers submit the documentation along with the processor. But I wanted to kind of give kudos to Lillian because she has a vast knowledge. So very few loan
Thank you.
officers
Thank you.
have underwriting experience, and that's a real plus.
Thank
So
you, John.
yeah, I wanted to indicate
Yeah.
that.
And
Yeah.
John, he and I, we've worked together for many, many years together. So we go way
Yeah,
back.
yeah,
So yeah.
absolutely. That's
And
right. We
yeah,
go
the
back.
underwriting and processing and closing. I mean, I have the whole back end of the mortgage process, with experience, so that I can walk, my customers all the way through the whole,
Yeah,
purchasing
and Lillian
process.
works the entire United States. You might want to, yeah, you touched upon
True,
that.
true. Yeah, Nexa
Yeah.
mortgages in 48 states. Almost,
Oh,
almost
so
all
so
of
the
them.
states I mentioned are not really like, there's only two states.
Yes, yes. So yes,
So I guess
you
my
can
question
learn.
is, how can be of value to both of you? I wanted to, yeah, uh, to be in the real estate.
Well,
Anyway,
you are being of value to both of us just by us being here right now together.
Yes, yes.
And
Thank you for having
yeah,
us.
exactly.
well, thank you both for both of you. I'm learning a lot actually. So Lillian, so with the market right now, where do you see the rates going?
Oh, that's a tough one. No one can really say where the rates are going to be going. All we have to, is to look at historical data and basically what the Fed says. So the Fed is predicting to increase rates to counter this rising inflation. And they're saying that they're going to raise it by another half a point at each Fed meeting. And that's like, there's 5 meetings left this year. And that's pretty drastic.
Oh,
Yeah,
Mhm.
so I don't know if that's a good plan. I have been hearing that maybe perhaps they'll increase half a point in the next 2 meetings, so June, July, and then see where inflation is at that point. And then I'm also hearing that there's fears of recession because there's a slowdown also. Layoffs, price increases,
yeah.
laying off employees. So right now it's a very, very, you know, tough time. But and who knows where rates are going to be going. You know.
But remember one thing, too: a recession does not necessarily mean a market crash.
That's
Okay,
true.
a
That's
recession
true.
does not mean a down market. A lot of people have moved their money into real estate to offset the uncertainties of the stock market.
Hmm.
Such as even hedge fund companies that bring revenue to 401ks and grandma's pensions and life savings. They're turning to the real estate during tough times to get through uh, the uncertainties out there. So real
Right.
estate
Real
really
estate
plays
has
real
always
well.
been an investment. To
Absolutely.
counteract.
I agree. Real estate is really
Yeah.
an investment. Yeah, I think that's what people are scared of, like the recession. Because they like looking back, like in 2008. Well, prior to that, in 2006, things like that, 2008, they were buy the prices of the houses are really high, and then it went down. So a lot of
It
people,
crashed. Yeah.
yeah, it crashed. So a lot of people like foreclosed their properties. A lot of people lost their money. I guess that's
Well,
one thing that
that's
people
that's a whole totally different period back then because there were a lot of exotic loans that people could not afford when the loans adjusted. So right now, this period of time, the mortgages that we have done in the last 2 years, they are the best performing mortgages. They're like great credit scores, great reserves. I mean, it's a totally different situation now as compared to back in '08.
Yeah.
Yeah.
There's another person who told me, because they were talking about the interest rates right now, and she told me, I can buy right now. We're buying a house right now with the high interest rate, and I can just refinance later. Is that a good decision? Do you think?
Yeah, rates are, they go up, they go down. So, and
Yes.
that's where I come in. I'm the expert that I watch it daily. I mean, we've gone through rate changes as much as 3 times a day, so the rates are they fluctuate. Yeah, and I
That's
watch it like,
great.
I watch it a lot. So I know exactly when it goes up and it goes down. And it's always going to be a volatile market. And right now, if you're buying in the fives, and rates go down, then it's a perfect time to refinance, when they go down. So there's always an opportunity, you know, and so why wait to buy,
Yeah.
Naomi,
They're only going to go up. They may slow down a little bit, but they're always going to go up. I mean, I've heard that in every 20 years, you can double the value of your real estate. Is that true, John? I've heard that.
oh
So
yeah,
yeah,
you know,
so I mean, and I've seen it actually. So I'm like, yeah, so you can grow your wealth, your net
Mhm.
worth with real estate terms
in good or
drastically.
bad markets, so-called good or bad
Yeah,
markets.
exactly.
When I first got started in real estate, interest rates were 12.75%.
Oh, wow.
Yeah. And then a few months later, they went as high as 13.25%. So I'm kind of giving away my age here because I'm going back. And I thought to myself, oh my goodness, I'm full time in real estate. Who's going to want to buy a home? And I thought, oh man, I'm going to starve. But guess what? People bought homes.
Mhm.
So here we are this many years later, some people in panic mode. Oh, are they going to hit 6%, 5%? It's very relative. Okay. So 5.5%, it's getting a home that you love, that you can build your dreams on. It's well worth it. It's one of the best
Yes.
places you can put your money.
And for those who are, I remember, Mr. Jen, you mentioned before, for those who have like another property, uh, you said, don't sell your house when you think you're about to lose money in selling it, right? Wait for the market again,
Well,
because
it's
you.
not even waiting for the market. It's what's best for you. I mean, I can talk to
Mhm.
5 different investors who have a different exit strategy, and all 5 of them can be right. Okay. Some people may want to sell a property before you and I would sell because they need that money to buy another investment property or a multifamily or a commercial property. So it's more the individual situation.
Mm.
One size does not fit all for making these kind of decisions.
Yeah, very true. Very true.
Yeah.
Yeah.
Just like one loan doesn't fit all either. and
Yeah.
and
Yeah.
what, your house, you can't compare your house to your neighbor's house and mortgage payments. Everyone's different.
Yes, very true. And with that, Lillian, I wanted to ask, how are people getting qualified for a mortgage now in this market?
Well, as I mentioned, we have over 160 different lenders. And so we have a wide variety of loan programs available to fit everyone's needs. A lot of people are resorting to, having to get cosigners or, gift funds, from family.
Mm.
There's also these stated programs, basically, which are bank statement programs for self-employed, stated, no ratio type programs, which are also, good for self-employed people as well. And then there's reverse mortgage. We can use that for people on a fixed income, and they can actually use a reverse mortgage to purchase a home as well. And then the investor loans that I mentioned, that basically qualify on cash flow and not necessarily the borrower. So, I mean, there's a wide variety of options there.
Yeah, I didn't know there's actually several types
Oh,
before.
very, yeah. And I think that's why I love my job, because there's like so many options. And I like finding the, the piece that fits the puzzle. So yeah, that's why I've been doing this for so long.
Yeah. That's the important thing, right? You love what you do.
Absolutely.
Yeah.
Absolutely.
Okay. So, my, I guess we were like at 45 minutes. This is really a good topic, so I
Wow.
can actually
I
Yeah.
talk
didn't
the
even
whole
know. Yeah,
day.
we're having so much fun.
And I enjoy both of you. So if there's one thing um that you actually wanted me to ask but I didn't ask right now, what would that be and how would you answer that question? Let's start with Lillian first.
Yeah, actually, I wanted to mention this. How is the market? How are we able to solve the problems of the market right now? Because right now we're in a flux right now. We are seeing some appraisal values not coming in on purchase offers, and what I have here to offer is a win-win solution for everyone. So it's a way of using a seller buy down when there's an appraisal gap. When the appraisal comes in lower, to where we could essentially keep the buyer's monthly mortgage payment and their cash to close relatively the same, and also the seller gets the full sales price as well. So that's a technique that we're using right now in this market.
Hmm.
It's a win-win situation for everyone. So yeah, that's something I would recommend if you're in that situation, John.
Thank you so
Yeah.
much for that, Lillian. Mr. Jan.
All I could say is what I may not have touched on is if anybody needs a market analysis, even though I specialize in the
Mm.
Phoenix area, I have a little bit of knowledge in comping, as we call it, for people who want to know what the values are of their property or future value, and so I can help them in that regard. Call it a market analysis to because you can't really rely on Zillow or Redfin or
Yes.
Trulia because they're kind of skewed, you know. Because a lot of people want to know what their home is worth or what values are going for. And oh, by the way, I do have. If anybody out there is interested in getting any certain graphs or statistics that are very up to date, I intended a meeting where those documents were provided. I'm very happy to share those. It shows you
Oh,
the
great.
graphs of where the trends are, where they have been, where they may be heading for. So it's kind of fun to look at. It kind of gives you an insight of.
Yeah.
But when people say, "Hey, what's the market going to be?" A year from now, I still think it's going to be healthy, but how, to what extent, I have to say I don't know. And it doesn't sound professional to say I don't know. What do politicians
You
say
really
when they
don't
don't?
know.
They never say they don't know. They always say it's too soon to tell, right? Because there's a proposal.
Yes.
or, or, or,
Right?
or, or they circle back.
It's
Right.
yeah, there you
Let's
go.
get
It's
up.
too
Let's
soon to tell.
let's let's put
Yeah,
that question in the parking lot.
that's right. That's right. So,
Yeah, very true.
I'm still learning. I learn something new every day. So it's
Yeah.
always changing. And once I think I have it figured out, the market has changed, as I said. So,
Yeah,
yeah.
I think I've got another question because you mentioned about the analysis of the area. I thought I'm going to close this now, but I just realized I still have a question. So when buyers close like sign their contract in buying that property, so they lock into that price, right? But it takes time for that property to be built. So when they actually close, again, they lock into a price and it's actually lower than the current price of that same model, same property in that same area.
Hmm.
So what, how can, like, if that same model is owned by another person and he wants to sell it, how are we going to price that? Are we going to go with the current price of that market, or the price that was recently closed, which is actually lower, because I don't know if you're
So,
understanding my
so I
question.
think you mean so you're saying a buyer goes under contract on a new house, but the say it takes 8 months to build, let's just say.
Yes.
And I think what you might be saying is the market value has actually gone down, which rarely happens, but it can, right? Was that your point? That what happens is the
No,
buyer's under contract.
example, there's two people, right? And then that one is still waiting for that property to be
Completed.
built, and
Yeah.
so they're locked in with the lower price, say example
Right.
600. And then the other person already owned that property, but the value is already up, right?
Yeah.
um but then the one with uh, finally closes at the rate that was still low, like example it's still at 600, but no, the
Yeah.
other one wants to sell the property that he already owned. The value is supposed to be at, say, 650, 670, but then
Right.
in the area the recent closure is like at 600. So how do we do that?
Well, the home will have to appraise if it's a new construction, right? The
Mm-hmm.
home has to appraise through the loan. If the loan does not appraise, or the seller does not appraise, the lender will not lend the money, and then therefore the buyer transaction can be null and void. So that's
Mm,
the first thing that I think about, right?
yes,
Um,
very true.
if you're saying what could a buyer back out of the transaction? Is that a possibility? I guess they would forfeit their earnest money deposit. You know, um, just like values go up and down, so everything is
Mm,
speculative. Yeah. Fortunately, we have more upside of the market
ups,
than the
yeah,
downturns. We
then down,
we do,
yes.
but not sure if I answered it correctly. But that's the first thing I think about when a property has to
Appraise,
appraise.
yeah, get the
Appraisal.
appraisal. Very true. Yeah, that's why they're there. Get that
Hmm.
appraisal. Very true. So if there's one takeaway that you want, like both of you would like to leave our audience right now in this very volatile market, what would that be? Lillian?
Yes. Okay. So, if any of you have any specific questions or personal scenarios that you want to review with me, on a one-on-one, please feel free to call me. I'm at 480-650-5412, or you can visit my website at www.lillianloans.com. I am more than happy to answer any questions that any of you have. And yeah, love to hear from you.
And we will add that. I did not add the phone number in the description, so I'll be adding that.
Okay,
Mr.
wonderful.
Chan,
Thank you.
thank you, Lillian. Mr. Chan,
Yeah, and I would echo the same words of Lillian. Anyone is welcome to call me John Gooding, Realty Executives, area code 602-688-9023. You could always hit me up on Instagram, John Gooding, Arizona Realtor and Investor. And you can DM me, and feel free. We're here for you.
thank you so much. I believe we have relieved some people with all their questions in their head. With they people sometimes are scared right now to invest or to buy a property. I guess we relieved that fear. And I hope that they'll I do hope, I really would encourage people to reach out to this to Lillian and John, because you will they love helping people. you know
That's
they
right.
love helping people. I like Mr. John, Lillian. I'll add you in my in my
Okay,
Yeah.
in my
please
fast
do.
call, how do you call that, speed dial. I've got Mr.
If
Jan.
you need to
So
know what the
yeah,
rates are today, call me.
thank you so much. I really appreciate both of you sharing your knowledge with us and helping our audience out there, alleviate their fear, answer the questions they might have with this market right now. So guys, yeah, don't be scared with real estate. As Lillian have mentioned, the real estate is always an investment. You will actually not be losing money even if the market right now, you say you may buy an expensive property, they say expensive, and rates are higher. There's always something out there for you. And then Mr. Jen said, it will depend on your need. So yeah, reach out to the people who can help you. Reach out to Lillian, reach out to John, and they are there to help you.
Yes,
Thank you
ma'am.
so much for watching. Um, we can all talk real estate the whole day, but
The whole day.
Sure.
thank you
Well,
so much
thank you
for
for
those
having
people
us.
who watch us
Thank
Thank
you,
you.
live.
Naomi.
Right now, there's like 139. I hope you guys would reach out. 139 people who are watching us
Okay.
live. So thank you so much for all your time. And then I'll I will continue to share this episode so that people who did not watch us live will be able to learn from us as well. Thank you so much. Bye.
Thank
Thanks,
you.
Thank
Mr.
you.
Jan.
Bye.
Bye,
Thank
all.
you, Jan.